Gold has always been an ultimate symbol of wealth, stability, and power. But in today's world, it is more than that. A silent challenger, a threat. This very metal is now one of the biggest risks to the dominance of the US dollar. According to recent reports, central banks worldwide are all prepared to buy 1,000 metric tons of gold in 2025. This would be their fourth year of massive gold purchases to diversify and expand their reserves from gold-dominated assets into bullion. Sounds like a major surprise? Although the US dollar remains the world's primary reserve currency dominating global trade, it continually faces growing threats from gold. According to recent reports, 47% of the global reserves are in the form of USD, while gold surpassed the euro as the second largest reserve asset in 2024, accounting for 19% of the share. This may still feel like a big difference between USD and gold, but a decade ago, USD accounted for 62% and gold 15% of all reserves. Simply put, the difference between gold and USD reduced from 47% to only 27% in less than a decade. Stay with us as we unravel why something as ancient as gold is considered a silent challenger to the existence of the US dollar, especially in a world where paper and digital currencies dominate. Since gold was rare, precious, and durable, it was universally accepted for thousands of years as a form of money. In fact, Rome and the British empires backed their currencies with gold, building trust of traders globally. In the United States, the story was no different. The gold standard was formally introduced and adopted by the Americans in the 1900s, which meant that every dollar was backed by a certain fixed amount of gold. However, this positive relationship between gold and the US dollar wasn't long-lived. The Bretton Woods Agreement in 1944 determined the US dollar as the reserve currency of the world. The dollar pegged itself to gold, while the other currencies pegged themselves to the dollar. However, by 1960, this system faced a lot of strain. There was more printed money than gold reserves available to fund wars and social programs. This paved the path to the turning point that made gold the real rival of the US dollar. Next comes the Nixon shock. In 1971, President Richard Nixon suspended the convertibility of the US dollar into gold, known as the Nixon shock. This decision allowed the US to print unlimited dollars and abolish the gold standard. It was at that moment that the US dollar was established as fiat currency, which was backed by the credibility of the US government rather than gold or any other commodity. And it was also then when gold became a major threat to the US dollar. That's because it was real, and for many was a representation of the actual financial truth. The US dollar is considered a king for many reasons. For starters, it is the currency of choice for most international trades. Some major commodities, such as oil, are sold and bought using the powerful currency, creating a high demand for the US dollar. Besides, countries like Saudi Arabia pegs their currencies to dollars, elevating its status even further. But what makes the US dollar so dominant over other currencies? Well, it's majorly the size of the US economy that makes the currency the king that it is considered today. The US gross domestic product, GDP, has now surpassed $30 trillion, reflecting a resilient economy driven by a range of industries. The robust economic growth of the US attracts international traders and investors to trust the stability offered by the dollar. The currency portrays itself as a safe haven in times of global economic uncertainty. Also, the system that increases the demand for the US dollar is heavily dependent on trust in the US leadership, low inflation, and the perception that the dollar will retain its value. But what if the trust gets shaky and becomes breakable? Despite its power and position, the US dollar isn't immune to a downfall. After all, it is just a currency built primarily on trust. One of the major modern threats to the US dollar is exploding debt. The US national debt currently stands at $36.2 trillion, way more than the combined annual output of Japan, China, the UK, Germany, and India. The debt has grown significantly over many years, and now the warning lights are brighter than ever. Unfortunately, this heavy debt weakens the confidence of traders in the dollar in the long term, resulting in a fall in its value. Also, although the International Monetary Fund (IMF) projects global headline inflation to decline to 4.2% in 2025 and 3.5% in 2026 from 2024, real-world inflation remains sticky. Think of it, when your paycheck buys you less than it used to a few years back, your trust in the fiat currency starts getting weak. Due to this very reason, nations such as Brazil, Russia, India, China, and South Africa, BRICS, are gradually making moves to reduce their dependence on dollars. This trend is known as de-dollarization and is achieved through increased local currency usage and the diversification of local currency and gold reserves beyond the dollar. Plus, the development of alternative payment systems, such as the New Development Bank (NDB) and the Contingent Reserve Arrangement, are also helping contribute to a decrease in reliance of countries on the financial systems led by the US. Now, the question is, what unites these efforts? Why are so many countries going against the US dollar? Well, it's gold. The rare metal is being used as a tool to diversify and reduce long-term dependence on the US dollar, because the latter is strong but not invincible. Gold is a non-political asset. This means that it doesn't belong to a specific country. It is universal, and every central bank recognizes its value. Besides, gold is designed to be inflation-free. In a world with rising tensions and political instability, the neutrality that gold brings makes it quite powerful. One recent example is Russia. After the sanctions imposed by the US, Russia aggressively added gold as a primary reserve asset to reduce its exposure to the US financial system. Gold now makes 56% of the total reserves Russia owns. China is doing the same, where USD reserves decreased from 58% to 25% in the last decade, while gold share increased from 2% to 8%. Gold shines even in times of crisis. Also, the significance of gold isn't just economic. It has a strong physiological effect in a way that it represents financial discipline, something the fiat currency lacks. But is gold a bigger threat to the US dollar than digital currencies? Many economists argue that digital currencies will easily replace gold and the US dollar very soon. The incredible rise of the central bank digital currencies, CBDCs, Bitcoin and blockchain-based financial systems makes many of us believe the same. However, what we fail to realize is that despite the growth of digital currencies, gold still remains relevant. That's because Bitcoin is volatile, which means that it has still failed to earn proper trust from institutions. Also, CBDCs are fiat, which are majorly controlled and manipulated by governments, making them dependent on them. These currencies are not as free as gold is. Gold has a long history of stability. It can't be taken over. This is why many new systems are converting physical gold into digital tokens to benefit from the metal's trust factor. Gold is another name for confidence. It is what people naturally trust when governments lose control. With the debt crisis and inflation going out of hand, and large nations announcing partial gold backing of their currencies, the power of the dollar may be overtaken by gold. A possible collapse of global confidence in fiat systems can easily trigger a flight to safety, with gold rising above the dollar, crushing its dominance even further. For now, gold is not replacing the US dollar, in the short term at least. Gold is considered as a safest option for investors at the time of conflict, so you can expect a rise in demand as long as there are major conflicts in the world like Middle East wars, the Russia-Ukraine war, and now the tariff wars, adding to the uncertainty. However, some questions remain. What if the wars end in the next few months? What if there is a period of calm after a few months when wars and tariffs get settled? Will it push investors and institutions to pull money out of gold and invest in more rewarding but risky investment options? Simply put, a lot depends on the political future of the world. However, for now, gold is seen as the safer investment option compared to the US dollar, hence the rise in value and demand. At this time, many financial advisors recommend that you should allocate at least around 10% of your portfolio to physical gold. Keep it as a form of insurance. While it will take time for gold to fully threaten the power of the US dollar, it is always a good idea to work smartly. If you're an investor, the key is diversification, especially in this increasingly unstable world. Gold is a signal. Every time you read about nations turning to gold or the central banks printing more money, take it seriously. The US dollar may be the king today, but the future may not remain the same. A simple break of trust can shatter the power of this currency, with gold anxiously waiting for its turn in the background for a comeback. But are you ready to accept this possible change? Thank you for watching this video. If you loved it, don't forget to share and like. Leave a comment to share your views on the topic as well. Also, don't forget to subscribe to this channel for more videos on power, money, and other forces that are shaping the world we live in.